I'm Dylan Ratigan. I've interviewed nearly every CEO and most world leaders during the past 25 years. And now on Bootstrapping, I'm turning my attention to the new CEOs and the irrepressible entrepreneurs leading the next generation of innovation in the world.
Welcome back to Tasty Live. I am Dylan Ratigan. Time for some more Bootstrapping. One of our favorite guests, Howard Tullman. You know him, you love him, even if he's a bit grumpy and pessimistic at times.
It's not getting better, Dylan. It's not getting better.
I was looking at the title of your latest column for Inc. magazine, and I can see that it says, "Don't fall for AI's false promises." At least you didn't call it a false prophet. You just said it was a false promise. We're over the tips of our skis. So what? We're always over the tips of our skis. I mean, that's the American way. We know that's how we got to the moon, Howard. You know, it requires a little believing and a little, what's the problem?
Look, my position is not that it doesn't work, not that it's not a great tool. It's just not a great tool for millions of companies that are wasting money and time and energy. They could take two steps back and materially improve what they're doing with machine learning tools, with CSR databases, with a million things. And the problem with the whole chat GPT situation is, frankly, it's like swimming in the ocean. It's so overwhelming that what comes back is not worthwhile. I mean, if you focused in the tasty trade world, if you guys focused in on your trading population and provided additional tools and help and guidance and everything for them, you'd be doing enormous benefit. If you tried to provide it for the whole world, everybody knows that you can't boil the ocean. So, to me right now, the whole chat thing for a lot of companies, somebody told me Boston Consulting Group is using it for research. For research, it's fine, even though it makes up, literally it hallucinates and makes up stuff. But for basic research, it's fine if you take the research with a grain of salt and you build off of that. To say it's going to do work for you or create research reports and stuff.
Right, but the essence of your point is rational, which is resources are finite. And when you allocate resources to one thing, by definition, you deprive other things of resources. And you're saying that there are very valuable technologies that can be utilized that may not have the headline value of AI. What's that?
You talked about space. Space is a vast frontier, no pun intended. And I understand that space makes sense. Space makes sense for us to be, imaginative and whatever. If you're talking about an insurance business, like Snapsheet, as I mentioned, or Balto, there's no mystery in anything in the entire insurance industry, okay? Not from an actuarial standpoint, a repair standpoint, a time standpoint, a cost standpoint, premium standpoint, totally measurable. So, asking the Oracle for some guidance as opposed to just cranking down on existing data and speeding up your process, you win every single time. It's 100%.
But isn't it better for your multiple if you're a publicly traded company to use the word AI?
Listen, everybody, this is the .com era all over again. This is everything. This is crypto. I mean, this is blockchain. Yeah, I understand that if you're a public company, that it may be.
If you say you're going to do some sort of hyper analytics that are hyper targeted analytics, doesn't do the same thing for your multiple as AI for insurance.
That's true. But to go back to insurance for a second, if half the time that it takes for me to settle your claim, I get a happier customer. I eliminate tremendous amounts of costs, rental costs, all kinds of other things, and it hits my bottom line. And ultimately, that ought to drive your multiple down the line. I mean, look, if you look at what's going on with the big guys in the insurance industry, the super winners are the people right now. State Farm, is doing a great job. Allstate's doing okay. Progressive is hitting it out of the park on a sales, standpoint. But some of these other people are just going to be gone. They may be gone, companies that are these next tier down companies. And to think that they think their future lies in sort of black boxes as opposed to, cranking down on what they're doing it's just probably off.
Well, and sort of the elephant in the room of the AI conversation is obviously Nvidia's stock price and Nvidia's multiple. Any rational person would say clearly this thing's overvalued. Clearly, this is you can make a very it's a layup to make a bear case, and yet it's hard to find someone willing to bet against
Yeah,
it.
well, look, that to me is a scarcity issue. They build a great set of chips, and those chips are going to be useful almost regardless of what use they're put to. So I don't think anybody is going to make a fortune betting against them. But we're also in the platform world, and now Microsoft and Google, they've already co-opted this, the chat stuff. I mean, I've got people set every day. I get a solicitation saying, we'll take your articles, your 500 Inc. articles, and we'll create a guidance system that just takes, knowledge from your articles and puts it in your words. And, anybody can ask a question.
What would Howard do apps?
Yeah, exactly. And so, but the truth is, if you go to Google and flip a switch now, they've already put it in there. Microsoft has already put it into their search capability. And you know what? When it comes back, here's what's so interesting. Their simplistic answer now, chat driven from Google, is not as interesting to me or as valuable as the list that used to come, even though the list was overwhelming, because it's so generalized that big deal. You look up a medical term, and you get 3 sentences. Yeah, and it's probably extracted from the generic handbook of medicine, but that's not an answer to the question that I'm looking for. So I think that the big guys are going to fold it in, and Facebook has its version. Everybody's going to have their flavor, and we're going to basically be back to what works for you in your business, and everything else is sort of gravy. Everything else is sort of excess.
I mean, is there a place where you think, you mentioned insurance, but is there a place, and maybe it is insurance, where you think it's being particularly abused in the sense where it's like misapplied, where you're like, this is nuts. It's a real waste of resources to use it in this way, whatever that way may be, or in this industry.
I think that an interesting question is going to first arise with respect to medicine. I think that it's going to be very scary to see whether or not the use in medicine to assist in the diagnostic process is going to be very powerful and successful, or is going to be something that they're going to take 5 steps back from, because if anybody challenges their diagnostic, approach, they don't have an answer. In other words, they don't have the underlying framework. So if you disagree with your doctor, now, on the other hand, if you've traveled internationally and you're in an emergency room and you have some kind of parasite and nobody has any idea of what's going on, but the metrics of that parasite can be submitted to this kind of a tool, and it'll say, were you in Zambia last week? And oh yeah, in Zambia, we've discovered this thing. Then, no doctor in the world in an emergency room is going to figure that out. So, it's a question of the appropriate use and frankly, the follow-on. I mean, I think that we're going to have a lot of situations where it's just a question of, are you going to take my word for it? Now, I'll give you a new shorthand, which is we're using in the insurance industry. And that is that, I've been saying for a long time that time is more valuable than money. But I think where we're headed is that time is also more valuable than accuracy. In other words, if you look up heuristic, I'd rather get 90% of the way there and be able to trade on something than waiting more days to get the research report that's vetted through 14 layers. And frankly, it doesn't tell me a whole hell of a lot more. And by the way, it's too late to act on. So I think that what we're going to see in all kinds of industries, for example, if somebody comes in and says, here's an estimate, and I say, well, look, we know that we're using photographs now to do estimates of, damage and in all kinds of different environments. Or look at Hawaii, okay? The insurance industry and the government are going to have to very quickly decide, are we just going to make a ballpark number and give every one of these people 10 grand or something so that they can immediately begin to relocate? I don't know how much rebuilding is even going to be possible there. And are the people going to say that's better, or are the people going to say, no, I'd rather wait 3 months while 14 different people argue with the electric company as to whether they cause the acceleration or argue.
Okay, sure.
Yeah, who's going to pay, right? And the answer is 70, 80, 90% of those people will take, 50 cents on a dollar and get on with our lives rather than wait 5 years for litigation. So we're going to see this in all kinds of different parts of our lives. I was just read a very interesting article about the whole industry that is returns. Okay. In Japan, 2% of sales are returned. In the United States, it's like 22%. Okay.
Mhm.
And we've learned online, why not order 3? And I'll send back 2.
Yeah. I mean, Zappos built a business based on
exactly.
We'll send you 20, you keep 2 and send back 18. I mean, that was
or Warby Parker, or any of these people. And so, so the interesting thing about that whole industry is it's unearthed the fact that 80% of the time, if I send you, for example, if Chewy sends you a 50-pound bag of dog food and it's wrong, they're going to say, keep the thing because it's more expensive to ship it back and we'll give you the money back. Okay. So there's a gaming strategy associated with now that's pretty amazing. It's like, where do I go when I get it for free if I threaten to return it? But more importantly, they're just discarding this stuff. And that's added a huge cost to these industries that are, it's not really free if they've hiked the price 15%, the return rates. So,
well, not to mention, all that's a whole other conversation because there's the whole carbon madness there and all the rest of that.
Well, and by the way, Amazon is very sensitive about claiming that none of this goes into any landfills or into any, is just destroyed. And their own vendors won't back that up. Their own vendors are, oh no, we did energy recapture. That means we put it into a steam boiler and burnt it, or something.
Preposterous. It's preposterous. Yeah. Moving to, you have a couple other things on the list today, and I wasn't. Let's go straight to the Fitch downgrade. I will get into the Chinese politics, but Tom and even I was relatively dismissive of the downgrade, and it's easy to be dismissive of it because it says as much about Fitch's desire to be talked about and Fitch's desire to have a headline.
Sure.
It's very much in Fitch's interest to do it, obviously, just because it makes them a subject discussion. Your point is that, there has to be a little bit of smoke for the fire team, that they can't credibly do the downgrade if there's not at least some implication of incompetence, if not outright credit risk.
Well, it's interesting that I don't remember the last time, maybe never, that any of the first world countries, whether it's England or whether it's the United States or whatever, has ever had a downgrade essentially based on politics. This, and not in the sense that the downgrader was political, but in the sense that they look at our politics and they say, there's no way in the world we're going to get a bill passed in 12 days when these idiots come back. And it's going to be months of all kinds of, stress and drama. And they pretty much have concluded that for 2 more years, the Republicans, for whatever reason, we're going to have the Trump, show, and they're not going to do one thing in Congress. And, now there are those of us who think that's probably good news because there's nothing they could do would be helpful. But the fact is that, if you really read the Fitch thing, it's based on saying the politics are so screwed up in the United States that we think that's going to infect and impair, governance and the financial markets. And so I think that, it's so interesting because as soon as it came out, I thought back to the movie about, the whatever the one was where the guy predicted, the big something. And The Big Short. Right. Mm-hmm. And you remember the scenes with the evaluators and the raters, they were like, well, of course, because they pay us to do this, and so, so in a way, this was slightly outside of the box for them to do that because they're so in the bag that it's completely in their interest, to continue to be supportive. But I think that it was accurate to the extent that I don't look forward to the next, couple of months, much less the next 18 months, in terms of what's going to happen in this country. I just think it's going to be a complete mess. And, every day now they surface a new couple of these Republican morons who were on tape saying they want to kill Social Security. And, you wonder, who do they think their voters are? And the answer is maybe their voters don't care about their own self-interest. I mean, it's so bizarre. But, the Republicans are just ticking off the boxes of everything that you would think that an older white, guy in practically anywhere in the country wouldn't think was the worst thing in the world that could happen to them. And yet, that's where they're at. So
does it affect your opinion of markets? Does it affect your opinion of the bond? I understand the sort of the political discussion, but does any of this affect your opinion of investing or credit or rates or any of this?
Well, I think that I'm still long on the 3 or 4 tech stocks that are not dependent on privacy. So I always divide it between basically Facebook and Google, which are going to have their hands full with privacy issues, and that's such low-hanging fruit for these politicians that I expect there'll be constant grief around that. Although Threads has put Facebook back in the sort of the nice guy column. And on the other hand, I think you look at Amazon, you look at Microsoft. I can't own enough of those stocks. I just think that they are bedrock. Microsoft is still in 80 or 90% of all the offices in the world. And they're doing it, Satya, to his credit, is doing a pretty good job of, weathering the storms. We grew up in the world where Redmond was the big evil, the world's worst. They don't even include Microsoft generally when they slam all these other, companies.
I know. Yeah.
And Amazon, people don't understand how pervasive AWS is. It's what propped them up this time around, but they run half the government. And so, the major basic tech companies that aren't going to have to deal with the fact that their business model depends on invading our privacy non-consensually. I'm perfectly happy for Amazon to know every single thing I ever bought because it saves me, again, time, money, and everything else. But I think the tech sector is strong. Where does
Apple reside in that world?
I think Apple is absolutely still a buy. I think that people again don't understand that all the hoo-ha-ha about whether you really need the 16, phone or watch or whatever doesn't matter. Apple TV, Apple, they've changed into a bundled services business. And if you really look at it, it's nice that they sell products, but their recurring revenue stream is completely and totally off the charts. And they whack you for storage, they whack you for every single thing you could imagine. So I think Apple is in a great position, and I think he's another guy who's kept his head down by and large. And by the way, Apple on the privacy side comes out, miles ahead. I think they staked that out, and it was risky. You remember there was a period of time when we thought they were communists or anti-government because they didn't let every schmuck who wanted to invade our privacy and open up our phones and everything else. Now I think people are much more forgiving and much more willing to understand that Apple, in theory, was looking out for us. Now, the big question is how successful can they be in healthcare? Because they are of the position, I call it, the 363 rule, okay? The 365 number of days in the year, you spend 2 of those days in the hospital or with your doctor. 2 days, okay? That's medicine today. Apple is interested in the rest of the 363 days when they're going to help you regulate your health using that, Apple Watch, using those devices. And that's I think it's $10 trillion now, and it's only going to get more so as 10,000 people a day age out. So you're going to have a device on your wrist that's going to manage your health, your medication, just about every other aspect of your life. And Apple's going to own that position. And by the way, the Ultra, which I wear now all the time with a 2-day battery, finally solved the issue that the thing was the best thing in the entire world, except it wouldn't last a reasonable business day. Now it lasts several days. And, if you're going to make it into a health device, it's got to be 24/7. Now, it doesn't have to be the only device you wear. You could have a couple of them. And that's an interesting thing too. I mean, I have a couple of them because, I rotate them, and that way, it's constantly reporting, it's constantly tracking. Otherwise, you don't get any of the benefits for sleep metrics or for these other kinds of things. So
And
I
then
think,
how do you interpret the Apple move from the product, forget the product side for a second, on the production side, incremental but still consequential migration from China to India,
well,
and the implications there of the U.S.-China relationship, is that a bellwether?
well, look, I think, Ram said a really interesting thing of all people. Ram recently did a podcast and said he thought that Japan was emerging as another place, highly industrialized, where we could take our battleships to be fixed instead of, taking them to other Asian ports and things, where we could reduce our dependence on China, because he thinks China is no one's friend. And I think India is in the middle. I mean, I understand that they're trying to be far more neutral than we wish they would be, but I think that that's a good play. I think it's it's an economy that is so materially different. People talk about the size of India and the size of China, but when you slice that up to the viable, employable population, India wins all day long. I mean, China's got billions of people, but they're useless. I mean, they're peasants, and so, as far as the, sweat labor and stuff, I think that more and more, interestingly enough, I think more and more is going to be chip based. And I think that, we're going to learn, I mean, if we haven't learned it already, that there are very few electrical devices that the second it stops working, you don't just throw it away. I mean, there's no repair cycle, there's no replacement, it's just buy another one, And so I think more it's happening with cars. Basically, I think cars are going to, the next couple of years, they're going to put Jiffy Lube and everybody else out of business, because if you open the hood of any car that's made in the last 2 years, you probably have violated your warranty. They don't want to. And by the way, you want to talk about Penske and some of these people that own chains of car dealerships. I mean, I think we're captive of the OEM guys again in a way that we haven't been for a decade or two. I mean, I think all that stuff got disintermediated, and now I think you got to go back to your dealer if you want them to fix your car.
Meaning that there's been a loss of sovereignty in the car world, basically.
Well, I think there used to, I mean, there was, when the average age of cars on the road was 11 years or something, I mean, some ridiculous number. But once the cars became computers, basically on wheels, all these little guys who used to repair cars, they're completely remitted to the older vehicles. California is saying, in 5 or 10 years, we don't even want the older vehicles on the road. And it's increasingly the case that you have to go back to the manufacturer / franchise dealer. You can't take it to a garage. I mean, if you have a 20-year-old car, that's fine until that car is not permitted to be driven anymore. But I think that these guys who are acquiring, groups of dealerships that's a really good business. I mean, I think they're going to do exceedingly well. And I think that the cars also are going to they're going to fold 100% of repairs into these things. It'll be a lifetime thing that'll be warranted. The interesting thing, again, returning to insurance, because I've, spent 40 or 50 years looking at different aspects of it. I think it's only a short period of time until they fold insurance into what your car purchase represents. And
meaning part of the current car purchase is an embedded coverage on the insurance side as part of the deal.
Absolutely. I mean, they give you extended warranty now. Who in the world wouldn't say, well, let's do insurance as well. So
why don't you think that's already happened?
Why do I think it hasn't already happened?
Yeah.
I think it's because the big insurance companies, essentially own the local legislatures, and they've.
It's only a legislative barrier. There's no market barrier. It's just a policy.
I mean, look, it's better than that. I mean, for a long time, the dealers themselves own the local, own their state legislators, and that's how they fought off Tesla for a while. That's how they fought off the internet for a while, because they were the guys who made it impossible to buy a car online. You had to have your car delivered at a dealership, for no good reason. Now you see Carvana and you see some of these other guys, and that's broken down. But I think insurance is an area where they could take a step forward. In fact, I had an interesting conversation with AAA, which I can't imagine any human being who still is a member of AAA, but they have tens of millions of people. And the reason I say that is because towing is now included with most of your cars. Your everything else, your triptych. Remember triptychs? I mean, you got Google Maps. I mean, the only thing your AAA card is good for now is it actually is acceptable as a bond card in some states. And so that's the reason that I still have it, because if you're a traveler, you don't want to give up your driver's license. The truth is, while you're waiting for your ticket to be processed, try going through TSA with here's my ticket instead of my driver's license. Right? But the truth is that AAA has better come up with something, better than what they have. And they in fact are moving into insurance. For that very reason.
All of this becomes just a legislative battle. It's entirely a matter of who can control the policymakers, which is a losing way to run a country, especially when these are your politicians.
And by the way, when they're 10 years behind in terms of innovation in every single area,
Howard, it's always a pleasure.
Good.
I'm sure I'll see you sooner than later.
All right. Talk to you soon. Thank you. Take care.
All right, thank you, Howard. Howard Tillman, you're watching Bootstrapping. I am Dylan Ratigan. More Tasty Live right after this.